Traders from around the world, I missed you, and in this video, I'll be covering what I think is going to happen for the markets over the next few weeks. Now, strap in, I'm going to have a little bit of a controversial topic. So the controversial topic, I think, is how in the world are the Qs still going higher after the majority of the largest portfolio positions of the ETF are getting absolutely crushed? We're going to talk about that in just a moment. But long story short, these magical lines are holding up the markets. These magical lines, of course, being the 200 simple moving average on both the adjusted and non-adjusted for dividends chart. So you can see this is what we are in fact bouncing off of. And the big question, of course, is will we be able to truly peel higher? And I think the answer is yes, and I'll show you why. In my opinion, this is right here the quote-unquote linchpin for the bullish move on the Qs. So if we close below this, and really possibly at this point now it's today's candle, if we take these positions out, we're going to have a little bit of a bear move. Now, here's why I think that's going to happen. As of now, we're following very, very closely with the pre-described CPI index type of move. Check this out. This was the prior CPI date. And then you had the retesting of a candle right here. Next day, you had a candle that was bullish gapping up. So to go forward, CPI date, which was bear candles gapping down. You had a retesting candle, which was the next day. And then you had the bullish candle gapping up. So there we go. Next, you had a bear retest. So there's the retest bear candle. So it gapped up into a retest. And then you had essentially three movements in a row of bullishness, three movements in a row of bullishness. Then you had a sharp pullback, and then out the gate, out of nowhere, you have a strong bullish day. Boom. A lot of similarities. So my expectations are higher, at least for the next month and some change. So what I'll be doing is realistically closing out of some of my bearish positions, expecting to the market to go a little bit on the higher side, using some of my stop losses for this particular price here, and allow this to trade back up into most likely the 303 price point in the next few weeks. Here's another reason why I think this is going to happen. Most of the stocks that have brought or should have brought the Qs down are already down massively, and the Qs didn't care. Case in point, Amazon, second largest company in the world, had a 9.8% gap down on earnings, breaking below all of its prior supports, making a new 52-week low and really a new 2-year low, closing below all support levels. Microsoft also had a very strong gap down on earnings, the second or third largest company in the world, and again, had gotten absolutely shredded, took out that candle low, and so far we just don't care. Meta, again, one of the largest companies in the entire world, has shredded hundreds of billions of dollars of market cap, making new lows, and the Qs able to shake it off without any issue at all. Netflix. Yes, Netflix has recovered a little bit, so congrats for anyone who's in that bullish. You had the really, really pretty bullish earnings gap back over here in October, and I do think that we could come back and retest that level, being that it's the 200 simple on the daily and the 100 simple on a monthly. So at this stage, you can definitely buy a pullback on Netflix, but we did already have, it's just absolutely diabolical debauchery of bearishness that has come in on Netflix already. This one's sinking down at one point, 75%. PayPal, also a huge proponent of the Qs, is and has been down a lot. It's down 72% from the highs, and of course the Qs from the all-time highs at this stage as of right now only down 31%. But 31% is pretty dramatic. Saying all that to say, we did make a new low here, and that's really all we need for this bear trend to happen. Although I do expect at this stage some little bit more consolidation and then a slow grind higher, like I mentioned, maybe back up into that 303 price point, because most of the stocks that are supposed to bring it down are already down. So at this point, if they begin to get bought up, well, that's going to lead the Qs higher. And of course, Apple having a huge day with a one white soldier candle up massively, now interacting with a 200 simple and the 100 simple. And again, I love Apple long term. They did amazing on earnings as always, and just slowly grinding higher. But you will have a nice little trend line up around 168.75 from here. So again, expectations are that we're going to slowly go higher. From a bank perspective, we have interest rates increasing, so that's good for the banks. JP Morgan is at the 200 simple, add a little bit of a resistance here, and on a weekly chart, you can kind of see that we are working on forming a double bottom. There are a lot of stocks out there working on forming a double bottom, like Caterpillar, which it's already formed. Home Depot, ticker symbol HD, which is doing right here. Boom, boom, boom. So if we get to close most of these necklines, again, long story short, we can have some small pullbacks, but I do think we're going to go a little bit higher before we potentially, most likely, have some lower lows ahead of us at some point, because the largest companies are going down on earnings and they are having hiring freezes. Google, Amazon, just to name two big ones, but of course, obviously Microsoft. Now, all of that being said, we did bounce perfectly off the 200 simple adjusted for dividends chart on the SPY really, really nicely 3 weeks ago with the CPI low. And again, this does look a lot to me like an inverted head and shoulders pattern or some type of reversal pattern, maybe a triple bottom of some nature. Pretty strong candle coming in today. Could I be wrong? Could we just roll over immediately on Monday? Absolutely. But I will say this, taking out the low and closing below the low of the main candle that's forming today will kind of be my signal to play some bearish moves again. But I am going to be exiting some of my bear positions, getting into some more bullish hedges. I did get into some bullish hedges here on October 18th because I did notice that CPI similarity that was forming and decided to go ahead and hedge on the long side with some shares. I'll add to those shares, and then I'll probably, most likely, as an if we do slowly grind higher on the broader markets, get into a collar on my shares in case we roll over, and if we don't, all is good. But at this stage, team, day trading has still been tremendous, fascinating, and a whole lot of fun. If you've been a part of the day trading movement, the day trading environment, or the real life day trading rooms, we've been having an absolute blast. Here's the 3-minute 10 EMA perspective on Tesla just as an example. And you had one of the greater setups right here. Beautiful, beautiful bull candle closing below the 10. The next candle was an inside candle. So if you shorted here with a stop here, which many traders did, bang, really, really nice win there. And then of course, bear candle closing above the 10, entry here, stop loss there, boom, another strong winner. It's amazing opportunities because there's so many good volatilities and the plays have been setting up quite deliciously and perfectly. So continue to keep an eye on that. I like this potential double bottom looking thing forming on Tesla as well. And it does really need to retest this 262 area. So that being said, Tesla's also had a lot of strength compared to the overall markets recently. And that's why I think any kind of buying that's going to come in is going to help prop up the overall markets because all the stocks that should have it gone down lower didn't. So with that being the case, I'm interested to see what's going to happen over the next few days and weeks, but please feel free to tune in to our Real Life Trading YouTube channel, which you are here watching this because we do post free content every single day, including an all access pass, which is the first 30 minutes of every single day, 9 to 9:30 a.m. Eastern Standard Time, where you can tune in, get some ideas, tips and tricks, and some thoughts on the overall markets for your day trading and your sentiment perspectives. Team, thanks so much for being a part of this community. Thank you for watching this video, and until next time, love life, live life, and trade it. Bye.